I want us to do some quick back test over here. So I had already drawn my everything. Now I want us to go to the 1 hour time frame. And what I usually monitor is how the 1 hour time frame during the weekend. Want to see how the weekly or the hourly time frame has been printing. So from the red box, that's where until where the market closed. That was our last week, and I've divided each day from Monday, Tuesday, Wednesday, and Thursday. Hopefully, you can see that. And what I have on my on my on my chart is this arrow that I had drawn from last week, where I wanted the market possibly to react from. But the initial fib level was this. If I can take you back to using that fib, was from the high of last week to this low that we had created at that moment in time before this week printed had already printed. So I wanted to see maybe the market from maybe below the above the 50% level. That's where maybe we could have maybe traced deeper into this, but a breakthrough the 50% level, I would have looked for a setup, but that didn't actually play out. What we ended up seeing is that we opened on Monday, dropped lower from the low. On Tuesday, we swept the Monday's low. That's why we have this thick line over here. And then we pushed higher. So our fib levels, I guess you can see from the high, if I can highlight my tool. All right. Where do I have my tool? Yeah, right there you can see the dotted lines. So from the high, which was this, and why did I use this high? It is because this OTE, or the premium of this price leg, had already been utilized. So from that high to this low, we had that key level, and also we had the 4 hour fair value gap, of which I was really watching to see lower prices. I will be taking you on how I did approach the market from the lower time frames, and the losses that I took, and that's what I want us to learn over here as to what actually really happened, that we can learn from this last week. So what you can see is, after we had taken Monday's low, also, did we have any sweep onto the left side? I don't think so. Yeah, we had these last week's low. We also swept these last week's low. So the market started displacing, going forming fair value gaps. This fair value gap was traded into. Now seems like we are forming a bullish structure, but to me this actually couldn't have been confirmed until this candle had broken through that high, seeing a fair value gap being confirmed. Now this what I would have maybe looked for, maybe targeting all these trend line liquidities, you can see, as well as we had that 4 hour fair value gap, as well as if we had used the fib level, or we are doing these hindsight wise, if we could have used the fib from the lowest low to the highest high, where do we have our 50% level? I guess you can see this red line over here. That's where we have our 50 level, which is slightly above this level. So to me, this area would have been maybe ideal to be looking for buys. And what time was it? Around 11 a.m. This would have been really an ideal buy, because we have broken structure, bullish fair value gaps being formed. We had another fair value gap that oral board respected. We have also now confirmed of a breaker block, low, high, lower, low, market creating that breaker block, sting into it. We tapped into these order blocks, and then what you can see, we kind of consolidated over here. Then the market later on during the Asia session and London session of the next day, we expanded, heading towards those 4 hour fair value gap. So I think also from a 1 hour time frame, one could maybe have gotten a position. I maybe how next time we can approach it, have it there, and see whether we can have a 1 to 2, maybe below this level, below that, and see, could we have had a 1 to 2? All right, I think this would have been an ideal trade position, though I wasn't really in it, but trying to see, and since price is actually fractal, if I could have maybe gone to the 1 minute and seen something like this, then most likely into this fair value gap at around 9 a.m. Maybe wait for these confirmations and everything, but I think immediately the fair value gap, tap in and wait for a tap in, then just wait for whatever will be happening with a 1 to 2. And one thing I've realized is nowadays I'm being kind of greedy, and that's one of the things that I should be working on, other than trying to look for 1 to 5s, 1 to 10s. The market usually don't provide those and have been banned because of that. So this was a good setup onto that for how our fair value gap was traded into. Now we had a sting into these OTE levels, so especially the 0.62 level. Now if I can get rid of these. All right, so since we have a sting into these 0.6 level, 0.62, all right, yeah, I need to be doing something, I remember. So since we have standing into 6.2 level, now we did have that nice rejection. This was on Wednesday New York session. Sweep of prior candle high, a drop lower of that level, drop confirmed a market structure shift. Now at around this point, around this moment in time, we had that drop going lower, formed another fair value gap. Somehow this fair value gap, we usually tend to see it as a breakaway gap. So I think on this day I could have somehow taken a loser, because if let's go to the 15 minutes and try to see the price action within these levels. If we could have actually taken a position, if so, within this range, let's go and see, here's green onto the 15 minutes time frame. Let's see what happened from the 30 minutes. So of the 30 minutes, what we can see is price also dropped off the OTE, sweeping the prior candle with this consolidation. And this consolidation was I think from London. This was a London consolidation, sweep of that, then the market displaced, forming a fair value gap here. So this was left open. That was later market traded into it, tapping onto the OTE. So later on, I think I could have gotten that position, but at that moment in time, as this market was printing, right, seeing these fair value gaps being formed, then most likely what I could have done in this area is I could have had something like that, because I was really bearish for me, honestly. You can see from that arrow I've shown you from the 1 hour time frame, from these areas I could have actually wanted to see a sell-off. So I could have waited for these market structure shift to be confirmed, and maybe I could have had, maybe if not, let's say sometimes a fair value gap might not be traded into at first. A good example is this time frame. Is what this price action over here. We didn't really trade into that 15 minutes fair value gap, but what I could have or what I tend to do is immediately that fair value gap confirms a fair value gap, then I jump in, sorry, and then let's see, 1 to 2 with my stops above those highs, assuming we had taken that, and 1, 2, right? All right, what could have eventually happened for this week? This position, I think, could really no, we couldn't really have hit a TP the whole week. But what the market did is we didn't really continue lower of these lower fair value gap. The market consolidated onto around this area, pushed back to the OTE levels, filling all these fair value gaps. So the best price would have been the higher fair value gap. If the market, if maybe I could have maybe taken around that point in time with my stops above that high, and 1 to 2, then actually this the TP would have been hit. So we are learning in this position. What I can learn, being filled at a better price is really key, because it can save you from even your position maybe It can save your position from maybe being stopped at break even, or maybe ending up maybe losing some good amount that you could have eventually had. So it's better maybe to wait for price to fill you at where you think, because if that fair value gap was also confirmed from the higher time frame or 30 minutes, also if we go to the 1 hour time frame, we can really see that we had also a 1 hour fair value gap that was confirmed there. So even though the market had rallied, this was on Wednesday, the market later on during the uh, around Asia, maybe the next day Asia, we traded into it. Then that's when we started dropping off maybe the OTEs, and maybe the best position to have captured this trade was this drop going lower. Let's see if maybe someone in that would have maybe taken that. Yeah, the market presented some good trader idea, because we had formed, now we are forming fair value gaps of those OTE levels, confirming there. Maybe you have your stop loss there, and then you have your 1 to 2 around that moment in time. That would have been really a fast move to your TP. And yeah, so this would have been a better feel. And sometimes moves like this tend to give you you find that your stop losses are so big, other than waiting for maybe the market to pull back, because it will refine somehow your stop loss. So that's what I'm actually learning in this move. The market dropped, went back to these uh how can we call these these New York lows. We swept the lows, then we consolidated off, and that's how Wednesday closed. Right around, we see the 1 hour. So the 1 hour has been really choppy. What happened on Thursday? We dropped, then consolidated a bit. Let's see what might actually have attracted it going higher. From the 4 hour, why am I not really going onto the 4 hour? Because we had already tapped onto that the OTE levels. Remember, over this whole move, right? Because I deleted it from the 1 hour time frame, because we have from that high. And why it is high? Because this price leg OTE has been used, or the premium has been used, so I use this. And now with this move, we can see that the price has already traded into, we have seen prices already traded into above the 50% and up to the 60%, and then we rejected. With that rejection, let me get rid of this fib. All right, so with that rejection, what we saw is we have been forming bearish fair value gap being respected, but the thing is, we are not breaking below lows. What we're seeing, we had lots of sweeps and not breaks below it, which was a sign of consolidation. And actually wrote a given note, maybe I don't know whether we can see it, that was it a 15 minutes? Whenever we have fair value gaps, yeah, as you can see a given node there. So ranging signs, FEGs not holding, therefore need to increase time frame. So whenever you see that fair value gaps are not holding, a good example is this price action over here. What we were seeing is bearish fair value gap being formed, not holding. Price disrespects them, we sweep liquidities. Bullish fair value gap being formed, they're not holding, we sweep liquidities, and we close below. Same to this area, fair value gap formed, candle closes above, disrespected. So seeing that, it was a sign of a range, and that can be seen clearly from the 4 hour time frame and also the 1 hour time frame. So on Thursday, what happened is the market rallied back again during the this New York. We pushed higher, we failed to take that high around this area. We dropped again, the market didn't take these lows, we consolidated, then later on during the night we dropped. We were bearish, but these are consolidation bearish move. Then the market rallied again on Friday. We swept these, we failed to take those highs. Again, we are dropping before the market actually closes. So with these, you can see the market clearly has been in ranging conditions. And long-term wise, I'm actually bearish. I will be doing a video after this. What I'm expecting to see these lows being taken, but this last week was a week where I took a few losses. And what can I learn from these few losses is that this wasn't my trade position. All right, is that where do you think where was I getting it wrong, right? So in this market, what I did is the market was actually dropping with fair value gaps. We were forming these bullish fair value gaps, bearish fair value gaps higher, and again we had formed this one lower. And to me, I want to see these higher fair value gaps remain as breakaway gaps. But what the market ended up doing, if I can have this fib from that high to the highest high, right? Because the OTE, this OTE, remember, has been utilized from this high towards this high. The OTE has been utilized. Now we have another price leg formed, that low to this other low to a high, I mean, sorry. So we have that high. The market, what I was doing is, you can see I was actually trying to sell inside discount. You can see the fib levels are here. We have the red line over here. This is my red line. Let me make these all right, something like that, so that we might see clearly. So we have this 50% here, and you can see that my entry was slightly below my 50%, which is something not really advised. And what you can see is the market pushed back to the OTE level, to the fib levels. We tapped onto the 6-2, and then the market sold off. And you can see what we had. I had a 1 to 3. What if I had a 1 to 2? Though my position wouldn't really have a TP hit, but if we can adjust and see, what if I got this position around this moment in time, around that moment in time, are above the premium, and my stops may be around this high right there, then assuming this position would have gone direct to my TP. If I could have maybe no, that move has already, remember, this is now the new move I'm entering. Yeah, assuming I could have taken this position around this area above the premium levels, right above the 0.5 level at that fair value gap, I would have filled with a nice price and my stops above there. Then the market could have consolidated maybe lower and taken me exactly at a 1 to 2, not even these lows. That's why I think no, I shouldn't really be targeting even lows, because from my initial position, let me take you back. For my initial position, you can see I was targeting below these liquidities that were here, below the Tuesday's lows. Sorry, I was targeting okay, I was targeting Tuesday's lows, below the lows, because I thought the market would have maybe gone lower, but that was wrong. An ideal position would have maybe been if I wasn't really greedy, maybe had it there with my stops above, and then had a 1 to 2, and then maybe something of this sort, which could have eventually hit TP, and could have been maybe a second position, other than targeting even these lows. If I could have been targeting the lows 1 to 3, yes, sometimes it can work, but in this case scenario, we were close to TP, then the market reversed direct to the stop loss. So I need to be working on maybe taking 1 to 2s, and then I'm actually out. So that's what happened. We rallied back to the OTE levels, and then the market dropped lower, engineering nice liquidities. Then the market pulled up on Thursday. This was on Thursday. Was watching this really move, and I was still bearish, but the same mistake that I did on Wednesday was repeated on Tuesday. Now we have formed another price leg. They still these price leg. We swept those liquidities, failed to take the high, and now because we were forming this, I entered as this candle was dropping, right? As this candle was dropping, that's why I did enter my position. But what attracted the market going higher is that we were leaving sorry is that we were leaving these other fair value gaps slightly above. All right, we had this 30 minutes fair value gap left open, so this is where I took my position as the market was trading lower. We had that small fair value gap, and also as the market retraced on it, closed above the fair value gap, it was to be a sign like not really looking good, because somehow we have seen a kind of bullish move, and the farthest maybe we can expect maybe the market to retrace to will have been actually the OTE levels, or above in premium, right? So where is that move? This was on Thursday. The market did, I think this is the time I took the position. Then the market pulled back again, assuming we didn't really have any order block here, any fair value gap. I don't usually use order blocks. Maybe we tapped into this order block, consolidated a bit, we swept liquidities, and then later on we started moving. So let's find out why the market really rallied to those highs. So this is the push. Oh my, this is the push going higher. We don't really have any fair value gap around this moment in time. What I can actually say is we did go to the OTE of this price leg from the high, from that low towards this high around there. All right. So using that, what we can actually see is we retrace to the OTE level of this price action from the low to the high. Tap to do that, consolidated a bit, we swept the liquidities, and now the market started tanking, going lower on Thursday, creating a nice market structure from the 30 minutes time frame. Let's see how this position would have been dealt with. Remember, this position also, though I entered here, we have seen like there are some gaps, 30 minutes gaps, which happens to be below discount. That is a sign that I should be using like maybe the market might maybe be reversing, right? Because we cannot maybe form a push like this and then maybe react off discount to continue lower. Yeah, sometimes maybe we might react, drop lower, fail to take this low. A good example is this. We failed to take this low, right, with this low, and then the market pull back. So sometimes it can form something like that. Fail to take that low, we pull back to the OTE, we use either liquidities to drop or fair value gaps. I could really wish to see what pushed the market to those OTE levels. From the 5 minutes time frame, nothing really, because the fair value gap we have or imbalances are balanced, and what maybe are all these liquidities maybe. Then we consolidated a little bit, then later on that's when we saw this market tanking lower. So an ideal position other than these would have been maybe around this area, maybe wait for the market to push back, right? Because we have already retraced to the OTE levels of this whole move, this move around here. We have swept liquidities, we have confirmed a market structure shift. Now with this fair value gap, I think that's where an ideal position would have been, targeting another 1 to 2, something of that sort. And though we could have maybe gone to the, we could have maybe been in a drawdown, because sometimes you cannot avoid something like this. But yeah, I think this would have been the ideal push. And if we can watch and see where did this where was this market going to with that pullback, we can identify that we had retraced. I want to have something here. Yeah, I want to use this tool, this fib. So from the low, which is that low, to the high, this high, where we could have had our stop loss, what we're seeing is the market from this low to the high, market retraced to the OTE. That's when we started tanking lower. Now respecting these fair value gaps, consolidated a little bit over here, and then during the Asia session we swept those liquidities, dropped maybe towards these levels. So that's how I think it could have been easy to close a week maybe with 4R, but in return I had minus 2R for gold. And I see there's something that maybe I should be learning on doing, is that always never try to be selling inside discount, right? Inside discount, I shouldn't be selling. I wasn't really trying to look for buys. I was mainly bearish. I held my buyers, and only that I was being taken out. And because I was kind of going crazy targeting these lows, 1 2 3s, 1 2 4s, and something like this could have happened in consolidations. We tend to maybe hit maybe a 1 to 2 or a sweep a major liquidity pool, and then the market reverses on you, closes you break even. And yeah, so something I'm learning from this is that we can predetermine consolidation conditions. And how can we maybe trade consolidate? If we have noticed trading, we are in consolidations, then always consider to be trying to sell. If you are bearish, try to sell at the premium where the prices are expensive. Then off premium we can sell, and trying to maintain just the bias that you had, because the first analysis most of the time tends to be right. And that was it for this week. Good, I say bad losses for me, because I have been in this space for long. And yeah, and let's see what will be happening from next week. I'm still maintaining my bearish bias, and we'll be doing a video to talk on what I'm really expecting these coming week. So see you next week, and maybe every day I will be doing videos back again, and we'll see what will be happening. Till next time, guys, be safe.